You were told the markets reward intelligence, that if you study harder, react faster, and think sharper, you can compete with anyone. That Wall Street is brutal but fair, a place where skill eventually rises to the top. But here's the uncomfortable truth. By the time you place a trade, read a headline, or analyze a chart, the outcome is already leaning in someone else's favor. Not because they're smarter than you, but because they saw it before you were allowed to. You're not late because you're slow. You're late because the game started earlier for someone else. And the most powerful players don't wait for the bell to ring. They move quietly, long before the crowd even knows what matters. This isn't about luck. It isn't about hustle. And it definitely isn't about intelligence. It's about access. What if the real competition happened before you even realized you were playing? When most people hear the name Goldman Sachs, they picture a powerful investment bank. Trading floors, sharp suits, brilliant analysts making impossible decisions in seconds. And that image isn't wrong, it's just incomplete. Because Goldman's real advantage isn't speed, intelligence, or even capital. It's something far more decisive. They see information earlier than almost anyone else, not rumors, not guesses. Actual market-moving signals, flows of money, shifts in sentiment, institutional behavior, before they show up on your screen. For decades, Goldman has positioned itself at the center of global finance. Governments, corporations, pension funds, central banks. When money moves at scale, Goldman is often there, advising, facilitating, or quietly observing. That position creates something invisible, but incredibly powerful: perspective. While you're reacting to price changes, Goldman is watching intentions form. While you're analyzing outcomes, they're tracking causes. This doesn't mean they always predict the future. It means they understand the present more completely than almost anyone else. And in markets, understanding the present a few minutes earlier can outweigh years of intelligence or effort. So how did Goldman build a position where information comes to them first? You probably believe markets move because new information appears. A report is released, a speech is given, a crisis breaks, prices react, and everyone adjusts at the same time. That belief feels logical, it feels fair, and it's almost completely wrong. Most market moves don't begin with public information. They begin with positioning. Large funds adjusting exposure, institutions hedging risk, governments preparing quietly before announcements are ever made. Goldman doesn't need secrets to benefit from this. They benefit from proximity, from sitting between buyers and sellers at global scale, from seeing orders accumulate, stall, accelerate, or disappear. This is the moment where your belief breaks, because by the time information becomes visible to you, it has already been translated into behavior by players who act earlier. You're reading the story after the first chapter already shaped the ending. Goldman isn't predicting markets. They're observing intentions before they harden into prices. This is why intelligence alone doesn't close the gap. You can analyze perfectly and still be late, not because you misunderstood the data, but because you never saw the full picture forming in real time. And the hardest part to accept is this: nothing illegal is happening. Nothing hidden needs to be exposed. The system simply rewards those closest to the flow. And distance, in finance, is far more expensive than ignorance. If access matters more than intelligence, where does that leave everyone else? This is where the discomfort really sets in. Because once you understand the system, you start replaying your own experiences. Trades that felt unlucky, decisions that seemed correct but failed anyway. You begin to realize you weren't wrong. You were simply reacting to a world that had already moved. Goldman's advantage isn't power, it's alignment. They position themselves where information naturally converges. And when information converges, clarity appears earlier. For most people, markets feel chaotic, unpredictable, almost cruel. But from Goldman's vantage point, chaos looks like structure forming. That doesn't mean they win every time. It means their losses are informed. Their risks are sized differently. Their reactions are calibrated, not emotional. And that's the mirror you're forced to confront. You aren't losing because you lack discipline or intelligence. You're losing because you're playing a delayed version of the same game. This realization hurts, but it also brings respect, because the system isn't mocking you, it's simply operating exactly as designed. Once you see that, the frustration begins to soften, not into comfort, but into understanding. So what rule quietly governs a system where seeing first decides outcomes? Here is the rule that quietly governs everything you've heard so far. Markets don't reward intelligence first. They reward position, not position as in status. Position as in where you sit inside the flow of information. Goldman Sachs didn't become powerful by predicting the future better than everyone else. They became powerful by placing themselves where decisions are formed before they become events. When a government considers issuing debt, Goldman is often advising. When a corporation prepares a merger, Goldman is often structuring. When institutions rebalance risk, Goldman is often facilitating. This creates a feedback loop that compounds quietly. Each interaction generates context. Each transaction reveals intent. Each cycle sharpens their understanding of how money is about to move. This is the turning point. Because once you see this, the illusion of a level playing field collapses. You were taught to believe that information arrives evenly, that markets react together, that opportunity is mostly about timing and courage. But the system is layered. There is public information, there is institutional information, and then there is situational awareness, the ability to see patterns forming before they harden into prices. Goldman lives in that third layer. And here's the part that matters most for you. This advantage doesn't require secrecy. It doesn't require cheating. It emerges naturally from being embedded at the center of the system. That's why the game feels decided early. Because by the time signals reach you, they've already passed through hands that understand them better. This isn't a conspiracy, it's architecture. And once architecture favors certain positions, effort alone can't rebalance it. If this rule is real, what does it mean for how you should play? This is where the story stops being about Goldman Sachs and starts being about you. Because the lesson isn't to compete with institutions that see first. That fight is unwinnable. The lesson is to stop confusing effort with position. Most people try to outwork systems that were never designed for them to win. They chase speed. They chase complexity. They chase signals that arrive too late to matter. Understanding this removes a dangerous illusion. It frees you from self-blame. And it replaces frustration with realism. You don't need to beat Goldman. You need to stop playing games where information disadvantage is permanent. That might mean longer time horizons, simpler strategies, areas where patience matters more than proximity. When you shift your focus this way, the system stops feeling cruel. It starts feeling predictable. And predictability is relief. The moment you accept where power actually lives, you regain agency. Not by fighting the system, but by choosing where you participate. So how does this invisible advantage shape the world you live in today? Once you understand Goldman's advantage, you start seeing it everywhere. Not just in banks, not just in finance. You see it in tech platforms that sit between users and data, in companies that don't just sell products, but observe behavior at scale, in institutions that don't predict outcomes, they witness decisions forming. The modern world rewards those closest to the flow, those who see demand before it becomes obvious, those who feel pressure before it shows up in headlines. That's why power today looks quieter than it used to. Less about power, more about placement. Goldman didn't invent this reality. They perfected an early version of it. And as systems grow more complex, this kind of advantage becomes harder to notice and harder to challenge, which is why it feels invisible, and why it feels unfair only after the outcome is obvious. The world you live in is increasingly shaped by people who see first and act calmly. Not because they're superior, but because the system delivers clarity to them earlier. Once you recognize that pattern, confusion fades. What remains is awareness. If you now see the system clearly, what role do you choose inside it? This story wasn't meant to discourage you. It was meant to orient you. You were never in the game you thought you were playing. And that's not an insult. It's information. Once you understand where advantage truly comes from, you stop chasing myths. You stop blaming yourself, and you start choosing environments where patience, time, and positioning work in your favor. That's what RINH Wealth exists to do. Not to sell shortcuts, not to promise fairness, but to help you see systems clearly so you can move calmly inside them. Because clarity is power, and belonging comes from understanding, not competition. Once you see the system, can you ever unsee it again?